The main budget for 2025 has just dropped, and there are a lot of people panicking, and yes, there are tax rises that are coming too that are going to affect most people. But let's run through the main changes on this video. Hi, I'm Michael from MDH Accountants. If you like this video, hit subscribe now. We drop videos on here on a weekly basis that help you with your business, help you grow your business, and also save you tax too. So if you're a business owner, this isn't about panic, this is about what has changed. So follow my video and I'll run through the main parts of the budget that will affect you. Income and national insurance thresholds are frozen until 2031. This is commonly known as stealth taxes, and what this means in layman's terms is because we all like to earn extra money each year, if the thresholds stay the same, it means your additional pay that you're going to be earning is going to be taxed more. And it's a real kicker. It's a bit of a backdoor way instead of putting up income tax, but this is going to be here till 2031, so you are going to see additional money that you earn pay more tax on it, and it's something that's going to create a lot of money for HM Revenue and Customs. Dividends, interest and personal buy-to-let income are all seeing rises in tax of 2%. This is a bit of a kicker because it feels like dividend tax has been attacked quite a lot recently, but there's nothing we can do about it. So make sure that you've got a handle on what all of your income is. So is your buy-to-let structured in the correct way? Are you making the opportunity of any cash ISAs if they're available? And also, are you maximising how much money you're taking money out of the business in the most tax efficient way too? So make sure you've got your planning absolutely nailed, because we've all got rises that are coming if your income is in these three areas. For a lot of business owners, it is. High value property surcharge. So if your property is valued at more than £2 million, you are going to be paying $2.5 grand. And then there's additional tiers as well as you go up. When your profit becomes more than 5 million, there's additional tax to pay on this. This I think is going to be a little bit of a grey area, because I can see a lot of appeals around valuations. But if you're getting valued at £2 million property, you have got extra tax coming, which is at least $2.5 grand. So make sure you prepare for this. In 2027, ISAs are going to be downgraded if it's a cash ISA. So if you're under 65 and you're looking to do a cash ISA, from 2027, you'll only be able to invest a maximum of £12,000, which in the past it was £20,000 per year. Pensions in 2027 are going to face inheritance tax, and make sure you've got your personal balance sheet absolutely nailed, because in the last couple of years there has been more items that are now exposed to inheritance tax. If you can get around it, who would want to pay an extra 40% to HMRC when your time has passed? Capital gains tax for employee ownership trust. In the past, if you were selling your business to an employee ownership trust, 100% of that will be CGT free. This is being cut down to 50%. It's a big change. Salary sacrifices on pensions. So from 2029, you are only going to be able to salary sacrifice £2,000 into a pension. Because any more that goes into a pension will be subject to national insurance. So make sure you don't miss out on this, and make sure you're structuring your pension payments in the most tax efficient way possible. The capital allowance is writing down allowance. Now, a lot of small businesses we work for get annual investment allowance, which in layman's terms means you get all of your tax relief on your assets on year one, unless it's a car. But your writing down allowance for any balances you've got left is going to reduce by another 4%. So make sure you're bearing this in mind when you're doing your future tax planning calculations. Minimum wage hike. If you're employing 18 to 20 year olds, the minimum wage limit is £10.85 an hour. And if you've got an apprentice, the apprentice rate is £8 an hour for 16 to 17 year olds. These all kick in April 2026. Make sure that you're compliant, and make sure that you've also got what your salaries are going to be when you're forecasting your future figures. And that could be for the next 1, 2 and 3 years, because these figures I think are going to continue to go upwards. The budget is a death by 1,000 cuts. There's a little bit here, a little bit here, a little bit here, without really sort of addressing the main problems that for me would be to increase income tax and just solve a load of problems completely overnight. It will also be about actually really looking at what value with some of the spending that we've got. And it's the same as a business owner. If you want to basically efficientise your business, make sure you haven't got waste in your cost. I think we've got tons as a country, and look at the tax we're paying. When you look at the tax that we're paying overall compared to the past, it's at a really record high level. So this can deflate you on massive amounts of ways, but make sure it doesn't. Make sure that you're taking this opportunity now because you can't change it, to optimize as much as possible. How lean can you be and how aggressive can you be? Because there's a lot of businesses that I'm talking to at the minute where we're basically saying is, right, we may even keep the personal spends a little bit lower, and look, right, if we invested in the business and get real opportunities that could do 10-20% returns, money may be best there for the short term. But then again, that needs to make sure that hits your business and your personal goals. But also, when you're looking at anything to do with tax, whatever decision you make, you need to know what your effective tax rate is. Because if you're going to go on a holiday and it's another 34% in tax that you're going to pay personally, you need to gross that up from the tax that you're deducting out of your business, because you're going to have to pay the dividend tax on that figure. So make sure that you do all of your planning really well, and make sure that you don't get completely deflated by this. Because even though the growth for next year is going to be quite small, whenever you've got a tougher market, the only way is to go out there, lead from the front and grab it, because a lot of other businesses will freeze. We help people with their businesses, and we also help them with their tax. If I can help with any issues on this video, click the link below. I'd love to have a chat.